All right, let's dive in. Today we're tackling ETFs, exchange-traded funds. They're everywhere, right?
Yeah.
And it seems like everyone's talking about them.
Seems like it.
But like, what are they really all about?
Well, you can think of them kind of like a pre-made investment portfolio.
Oh, okay, interesting.
Yeah, it's all bundled up nicely. Makes it easy to just jump in.
So instead of buying like a bunch of different stocks or bonds individually, you get a whole bunch in one go.
Exactly.
Okay, that makes sense. But are ETFs like all they're cracked up to be?
That's what we're here to find out.
Right. We're going to explore like all sides of it,
Yeah.
the good, the bad, the potential pitfalls.
All of it.
So you can walk away feeling like, all right, I got this. I understand ETFs now.
Informed investing is key, right?
Totally.
Got to look past the hype and really understand how they work.
Exactly. So let's start with like, what makes ETFs so appealing in the first place? Why are people so drawn to them?
Well, diversification is definitely a big one. I'd say that's one of the biggest selling points.
Diversification.
Yeah. And instead of putting all your money in one company,
Right.
hoping it'll like skyrocket, you're spreading the risk across a whole bunch of assets.
So it's like, don't put all your eggs in one basket.
Exactly. Exactly. You got it. Spread them out a bit, right?
Makes sense. And this isn't just about owning different company stocks, is it?
Nope. Not
There's
all.
more to this whole diversification thing.
Right. You can diversify across different sectors like tech, healthcare, energy, or even like specific parts of the world.
Oh, wow.
Yeah. Like think about the Invesco QQQ Trust, for example. That one tracks the NASDAQ 100 index.
Okay, so very tech heavy.
Oh, yeah. It's full of those big names, Apple, Microsoft, Amazon.
Right, right.
So if you think the tech sector is going to keep growing.
QQQ could be a way to jump on board.
Exactly. Without having to pick individual stocks.
Gotcha. And if one of those tech stocks in the ETF, like, takes a hit,
The others can kind of balance it out.
help cushion the blow.
Yep, that's the idea. It's all about managing risk, really.
And that's crucial for any investor, no matter what.
Oh, sure.
So this whole diversification magic that it can go beyond the U.S., right?
Oh, absolutely. You can easily get into international markets with ETFs.
Okay, cool.
Yeah, there's one called the Vanguard FTSE All World XUS ETF. VXUS is the ticker symbol.
VXUS. I'll have to check that out.
It gives you exposure to companies like all over the globe. Developed countries, emerging markets, the whole shebang.
So even if you don't have a ton of money to invest,
You can still build a pretty diverse portfolio.
just with ETFs, that's amazing.
Exactly. And that kind of leads us to another big advantage of ETFs. They're
Oh.
super accessible.
Accessible, how so?
Well, some mutual funds, they might require you to invest like $1,000 or more to get started.
Right, right.
But with ETFs, you can often buy just one share, for less than $100.
Oh, wow, really?
Yeah. There's one called the SPDR S&P 500 ETF Trust. It's known as SPY.
SPY.
Yeah, with SPY, one share gets you a tiny piece of like 500 of the biggest U.S. companies.
Oh, wow. That's pretty cool. It's like dipping your toes into the stock market
Yeah, exactly.
without needing a ton of money to do it.
Right. No yacht required.
Exactly. Speaking of navigating, let's talk about flexibility.
Oh, yeah.
That's got to be another area where ETFs really shine, right?
Definitely. They trade on exchanges all day long, you see,
Okay.
just like regular stocks. And that's different from mutual funds.
How so?
Well, mutual funds, they're only priced once a day at the very end of the trading day.
Oh, okay, I see.
So with ETFs, you've got a lot more flexibility.
It's much more dynamic.
Exactly. It means you can react to market changes in real time. You can buy or sell ETF shares whenever the market's open.
Oh, that's cool.
Yeah, it's great for both short-term traders and long-term investors.
Short-term traders, you mean like people who are trying to make quick profits?
Yeah, exactly. They want to react to market swings. And then you've got long-term investors. They might want to adjust their holdings based on new information or like how the market's trending.
Makes sense. Okay, so we've got diversification, we've got accessibility, we've got flexibility.
Yeah.
Anything else we're missing in terms of like the advantages of ETFs?
Oh, don't forget about taxes.
Oh, right, taxes.
Yeah.
Always had to think about those.
ETFs are generally known for being more tax efficient than mutual funds.
Okay.
Especially for us U.S. investors. It's all because of how they're structured.
Okay, I'm curious. Tell me more.
Well, they use something called an in-kind redemption process.
In-kind redemption
Right?
process.
It's a mouthful, I know. But basically, when people sell their ETF shares,
Yeah.
the fund manager doesn't have to sell the underlying securities to, cover those requests.
Oh,
They
interesting.
can deliver a basket of those securities in kind to the seller.
Okay, so they're not constantly buying and selling within the fund.
Exactly.
And that helps to avoid those, like, taxable events.
Yeah, like capital gains distributions.
Right, right. So that's a big plus for ETFs then.
It can definitely help investors keep more of their gains, potentially.
That's awesome. But let's be real for a second. No investment is perfect, right?
Oh, for sure not.
So what are some of the challenges or like the potential drawbacks with ETFs?
Well, people always talk about how ETFs have lower fees than mutual funds.
Yeah.
And that's generally true, but fees can still be a factor,
Okay, how so?
especially when you start looking at those more specialized ETFs, the niche ones.
Give me an example.
Sure, let's say you're interested in thematic ETFs, the ones that focus on specific trends.
Oh yeah, like robotics or AI, stuff like that.
Exactly, exactly. Or clean energy, all that. Those funds often need more active management and research, which can lead to higher expense ratios.
Compared to something like SPY, right?
Right, right. The good old SPY. So even though the fees might seem small at first,
They can add up over time.
oh yeah, especially over the long term. And that eats into your returns.
Right. Compounding, it works both ways.
Exactly. So always do your homework, look at those expense ratios.
Compare different ETFs before you jump in.
Exactly.
All right, that makes sense.
Yeah.
Now, what about liquidity? Any issues there?
Liquidity. It's definitely something to think about, especially if you're going beyond those super popular ETFs.
What do you mean?
Well, the ones everyone knows, like SPY, QQQ, those are incredibly liquid.
Okay.
You can buy or sell huge amounts of shares, and it won't really affect the price.
Right, right.
But when you start looking at, like, less popular ETFs,
Yeah.
the more specialized ones, you might run into lower trading volumes.
Oh, I see. So it might be harder to actually sell those shares when you want to.
Exactly. And lower trading volume, that usually means wider bid-ask spreads.
Okay.
So you might end up paying a bit more to buy or getting a lower price when you sell.
So it's kind of like navigating a narrow road
Oh, yeah.
compared to a wide open highway.
Perfect analogy.
So before you invest in one of those more niche ETFs,
Check the trading volume. Make sure it makes sense for you.
right, aligns with your strategy and your risk tolerance.
Exactly.
All right, solid advice. Now, let's switch gears a bit and talk about those thematic ETFs we mentioned earlier.
Thematic ETFs, okay.
They seem to be all the rage these days.
Yeah.
And it's kind of easy to see why, right?
Yeah, I get it.
It's like investing in the future you want to see.
Exactly. You get to put your money behind the trends and innovations that are changing the world.
We're talking AI, robotics,
Genomics, clean energy,
a metaverse,
even space.
space.
Yeah, there's actually ETFs that focus on the space economy now.
That's wild.
Yeah.
It's like something out of science fiction.
I know, right? And that's a big part of the appeal, I think.
Yeah, you're not just looking at the potential return.
Right.
You're investing in something you actually believe in,
Exactly. It's about aligning your investments with your values and passions.
like doing your money where your mouth is, so to speak.
Exactly. Like if you're really passionate about clean energy. Yeah.
There are ETFs that focus specifically on companies developing those solutions, like solar, wind, all that.
So it's not just about making money, it's about supporting the causes you care about.
Exactly. But you got to remember, thematic ETFs can also be more volatile.
Volatile. Okay. Why is that?
Well, they're laser focused, right?
That one specific theme or sector.
Exactly.
Yeah.
So their performance is really tied to how well that theme does. If it struggles, the ETF's value can swing up and down pretty dramatically.
So higher potential reward, but also higher risk.
Yeah, it's that classic trade-off.
Got it. So thematic ETFs.
Approach with caution. Don't put all your eggs in one basket, so to speak.
Okay. Make sure they're just one part of a diversified portfolio.
Exactly.
Now, before I move on, I want to quickly mention something for our international listeners.
Okay.
Currency risk. It's something to be aware of when investing in ETFs.
Oh, definitely. If you're investing in an ETF that's in a different currency than your own, those exchange rate changes can really impact your returns. Right. It can be a good thing or a bad thing.
Totally. Like
Yeah.
if your home currency weakens against the US dollar, your returns on a US-based ETF could go up.
Oh, okay.
But if your currency gets stronger, those returns could actually decrease.
So it's like a seesaw. It can go either way.
Exactly.
So how can investors manage this risk?
Well, the good news is there are some ETFs that are specifically designed to hedge against currency fluctuations.
Oh, cool.
Yeah, they can be a good tool if you're investing internationally.
All right, that's good to know. So we've covered a lot of ground here. ETFs are a great way to get into the market.
For sure.
They offer a lot of flexibility and potential, but
But
it's important to understand the details, right?
absolutely, you got to know what you're getting into.
Don't just jump in blindly.
No way. Do your research, understand those underlying assets, think about the risks involved.
Right. So let's shift gears a bit and talk about building an ETF portfolio. Like, let's say someone is totally new to investing,
Okay.
maybe in their 20s or 30s. Where do they even begin?
Well, if you're just starting out and you've got a long time horizon,
Yeah,
a good place to start might be a broad market ETF, like VTI.
VTI,
That one tracks the whole U.S. stock market.
the entire U.S. stock market.
Okay. And then to add some global exposure, you could also consider an international ETF, like VXUS, the one we talked about earlier.
Oh, VXUS.
Yeah,
Right. So VTI for the U.S., VXUS for international.
exactly. It's a simple combo, but it gives you a solid foundation.
A 1-2 punch for global diversification.
I like it.
But what about people who are a bit closer to retirement?
Yeah, that's a different ball game.
They probably shouldn't be, like, going all in on risky growth stocks.
Right, really not.
So how should their approach to ETFs be different?
Well, as you get closer to retirement, your investment strategy usually needs to shift.
Okay.
You want to start thinking about preserving your capital,
Yeah, makes sense.
still aiming for some growth, but
But being a bit more cautious.
exactly. So instead of focusing just on stocks, you might want to gradually add some bond ETFs to the mix.
Bond ETFs. Okay.
Yeah, something like BND. That one gives you exposure to a diversified portfolio of U.S. bonds.
So bonds become more important as you get closer to retirement.
That's a pretty common strategy.
Why is that?
Well, bonds tend to be less volatile than stocks.
'Cause,
They can provide a steady stream of income, too, which can be nice during retirement.
it's all about aligning your investments with where you are in life, right?
Totally. Your needs and your goals change over time.
Now, earlier we talked a bit about fractional shares.
Yeah, fractional shares.
How do those fit into the whole ETF picture?
Oh, they've been a game changer, honestly. They've made investing way more accessible for a lot of people.
How so?
A lot of brokerage platforms let you buy just fractions of a share now.
So you don't need to buy a whole share.
Nope. You could invest in an ETF with like $5, $10, whatever you can afford.
Wow, that's amazing.
It's opened doors for younger investors, people with limited funds, everyone, really.
It's like democratizing investing.
Exactly.
Now, I'm also curious about ETFs for commodities, like gold, for instance.
Oh, yeah. Gold.
Can you really invest in gold without, like, having to store gold bars somewhere?
You absolutely can. ETFs have made investing in commodities so much easier.
Okay, cool.
Like with gold, you can invest in an ETF like GLD. It tracks the price of gold, and it's way simpler than messing around with physical gold.
Yeah, no need to worry about security or storage or anything like that.
Exactly. Plus, there are ETFs for all sorts of commodities now.
Like what?
Oil, silver, natural gas, agricultural stuff.
Wow.
It's a great way to diversify.
So it's not just stocks and bonds anymore. You can get into all these other asset classes with ETFs.
Yep.
What about real estate? Are there ETFs for that too?
You bet.
Seriously?
Yeah, there's VNQ.
VNQ.
That one lets you invest in a bunch of different real estate properties.
Yep.
And you don't have to actually own and manage any property yourself.
So you can be like a virtual landlord
Something like that.
without the headaches.
Exactly. It's way more convenient, and it's pretty liquid, too.
So whether you're into tech or international markets or gold or real estate or even space,
There's probably an ETF out there for you.
it's amazing.
They cover so much ground. It's crazy.
But with all this choice, it's got to be even more important to do your research.
Oh,
Really.
absolutely.
You can't just pick ETFs randomly.
No way.
You have to understand what you're investing in.
Right. Know the underlying assets, the risk profile, all of that.
So where can people go to learn more about specific ETFs?
There are some great resources out there.
Like what?
Websites like Morningstar, they've got in-depth analysis on tons of ETFs. You can see their holdings, their expense ratios, historical performance, all sorts of stuff.
So it's like having a detective's toolkit for your investments.
Exactly. Knowledge is power. The more you learn, the better decisions you can make.
All right, so do your homework, folks.
Yeah.
ETFs can be an awesome tool, but
Right?
you got to use them wisely.
Exactly.
All right, any final words of wisdom before we wrap up this part of our ETF deep dive?
I just say, remember, investing's a journey, not a race.
Oh, I like that.
Take your time, explore different ETFs, find the ones that really click with your goals and your risk tolerance. Don't be afraid to ask questions either.
It's like building a puzzle. Find those perfect pieces that fit together to create your ideal financial picture.
Exactly. And as you learn more, you can refine your strategy over time.
Awesome. So, to recap, ETFs.
Powerful tool.
They can help you diversify, invest in all sorts of different asset classes,
Stocks, bonds, commodities, real estate, you name it.
but it's crucial to understand how they work.
Definitely.
Pay attention to those fees, that liquidity, the potential risks.
It's all about finding that sweet spot, The balance between potential returns and managing risk.
Absolutely.
And knowledge is key. The more you learn about ETFs, the better equipped you'll be to make those smart decisions.
So for our listeners who are ready to dive into the world of ETFs, what's one question they should be asking themselves?
I'd say, now that you know more about ETFs, what kind of investment strategy do you want to build? What kind of future are you trying to create with your money?
Oh, that's a great question.
It's not just about picking investments, it's about the bigger picture,
Well, your goals, your values, what you want to achieve.
Exactly. Investing isn't just about numbers, it's about using your resources to make a difference.
Well said. Thanks for joining us on this ETF adventure. We hope you've learned a lot and feel ready to explore this exciting world of investing. Keep learning, keep investing wisely, and until next time, may your portfolio be ever in your favor.
Hear, hear. And it gives you exposure to a broad range of U.S. bonds.
So as you get closer to retirement, it's like you're gradually shifting more of your portfolio towards these bond ETFs.
Exactly. It's a pretty common strategy.
And why is that? Why are bonds a good choice as you approach retirement?
Well, bonds are generally less volatile than stocks. They tend to be a bit more stable.
Okay, that makes sense. You don't want to be taking on too much risk when you're close to retirement.
Exactly. And they can also provide a steady stream of income.
Which can be really helpful during retirement, right?
Exactly. When you're not working anymore, having that predictable income from your investments can be a big plus.
It's all about creating that financial security for your golden years. So it sounds like as you get closer to retirement, it's important to really think about how you're balancing your portfolio.
Yeah, for sure. And, it's not just about age either.
Right.
Everyone's situation is different, right? Their risk tolerance, their financial goals, all of that.
So working with a financial advisor could be a good idea.
Oh, definitely. A good advisor can help you figure out the best strategy for your specific situation.
Create a plan that's tailored to you.
Exactly. All right. So we talked about fractional shares earlier.
Yeah, those fractional shares.
How do you think those play into the whole ETF world?
Well, I imagine they make ETFs even more accessible, right?
Oh, absolutely. They've been a game changer for a lot of people.
How so?
Well, before fractional shares came along,
Right.
if you wanted to invest in an ETF, you had to buy a whole share.
Right.
Which could be expensive,
Yeah.
especially if the ETF's share price was high.
Right. Some of those ETFs can be hundreds of dollars a share.
Exactly. But now with fractional shares, you can buy like a piece of a share.
Oh, okay.
So you can invest with whatever you can afford, even if it's just a few bucks.
You don't need a ton of money to get started. That's awesome.
Exactly. It's opened doors for so many people, younger investors, folks with limited funds, everyone, really.
It's like they've taken this barrier to entry and just shattered it.
Exactly. Investing should be accessible to everyone,
Totally. Now, let's talk about something else that I'm really curious about. ETFs for commodities.
Commodities. Oh, yeah.
Like gold, for example.
The classic gold.
So is it really possible to invest in gold without having to, buy actual gold bars?
Absolutely. That's the beauty of ETFs, right? They've made investing in these things so much easier.
Okay, so tell me, how does it work?
Well, there's an ETF called GLD.
GLD.
Yep. And that one basically tracks the price of gold.
Oh, interesting. So if the price of gold goes up, the value of GLD goes up.
Exactly, and vice versa. So it's a much simpler way to get exposure to gold than actually buying and storing physical gold.
Right. No need to worry about finding a safe place to keep those gold bars.
Exactly. No need for a vault in your basement. And it's not just gold either.
Oh, there are ETFs for other commodities too.
Oh, yeah, tons. Oil, silver, you name it.
Wow.
Natural gas, agricultural products.
So you can really diversify your portfolio.
Totally. It's a great way to add some different types of assets to the mix.
It's not just stocks and bonds anymore. You can get into all these other areas.
Exactly. The world of ETFs is vast and ever expanding.
Speaking of real estate, can you even invest in that through ETFs?
Oh, you bet.
Seriously.
Yeah. There's one called VNQ.
VNQ.
And it lets you invest in a diversified portfolio of real estate properties without all the hassle of actually owning and managing physical property.
So you can be a landlord But without the headaches.
Pretty much no late-night calls about leaky faucets.
That sounds amazing.
It's a great way to tap into the real estate market without needing a ton of capital up front.
Or the time commitment that comes with owning actual properties.
Exactly. It's all about convenience and flexibility.
So whether you're interested in tech stocks, international markets, precious metals, real estate, or whatever else.
There's probably an ETF out there for you.
It's amazing how many options there are these days.
It really is.
Yeah.
The ETF universe is constantly evolving. But, with all this choice, it's even more important to do your homework.
Right. You can't just go in blindly and pick random ETFs.
No way. You got to know what you're getting into.
So what are some tips for researching ETFs?
Well, first things first, understand the underlying assets.
What do you mean? Like, what exactly does the ETF invest in? Is it stocks, bonds, real estate, something else?
Right. You've got to peek under the hood.
Exactly. And look at the ETF's expense ratio.
Those fees, right?
Yep. Even small fees can add up over time. And check the liquidity.
So you can actually sell those shares when you want to.
Exactly. You don't want to get stuck with an ETF that's hard to trade.
So where can people go to find this information? Like, where can they actually research specific ETFs?
There are some great resources out there. Websites like Morningstar, for example.
Morningstar, okay.
Yeah, they provide in-depth analysis on a ton of ETFs.
So you can see things like the holdings, the expense ratio, the historical performance.
All of that. And most brokerage platforms have research tools and educational materials too.
So there's really no excuse for not doing your research.
Exactly. Take advantage of the resources that are available. Arm yourself with knowledge.
Because knowledge is power when it comes to investing.
Totally. You got to be an informed investor. Make sure your choices align with your goals and your risk tolerance.
All right, so we've talked about the different types of ETFs, the pros and cons, how to research them.
We've covered a lot of ground.
Any final words of wisdom before we wrap up?
I'd just say, remember that investing is a journey, not a race.
Oh, I like that.
Take your time, explore the world of ETFs, find those investments that really resonate with you.
And don't be afraid to ask questions along the way.
Exactly. There are so many resources available. Talk to financial advisors, read articles, do whatever you need to do to feel confident in your decisions.
So to sum it all up, ETFs.
Incredible tool.
They can help you diversify your portfolio, access all sorts of different asset classes.
Stocks, bonds, commodities, real estate, you name it.
But it's crucial to understand the nuances.
For sure. Look at those fees, understand the risks, and don't just blindly jump into anything.
Do your homework.
Exactly. Knowledge is key.
So for our listeners who are ready to start exploring the world of ETFs, what's one question they should be asking themselves?
I'd say, now that you have a better understanding of how ETFs work and the different options that are out there, what kind of investment strategy do you want to create? What kind of financial future are you trying to build?
That's a great question. It's not just about picking investments. It's about the bigger picture. Your goals, your values, what you want to achieve with your money.
Exactly. Investing isn't just about numbers. It's about creating a future that aligns with your vision.
Well said. Thanks for joining us for this deep dive into ETFs. We hope you found it insightful and inspiring. And until next time.
Until next time.
And until next time.
Until next time.
May your portfolio be ever in your favor.
Here, to those gains.
And to smart investing. Thanks for joining us on this deep dive into the world of ETFs, everyone. We hope you learned a thing or two and you're feeling a bit more confident about navigating this whole ETF landscape.
Absolutely. ETFs can be a fantastic tool for building your wealth and achieving those financial goals.
But as we've discussed, it's all about informed investing, right?
Couldn't have said it better myself.
Do your research, understand what you're investing in, and make those choices that align with your individual needs and risk tolerance.
That's the key.
So keep learning, keep exploring, and keep those questions coming. Until next time, happy investing.